Hello, everyone, and welcome to this week ahead market outlook. This is Mohanad Yakout, Senior Markets Analyst at Scope Markets. And in this video, we will dive into the key data releases and economic events that will shape the trading environment during the next week. Of course, things have been really turbulent during the previous few weeks. And although it might look a little bit calmer from the outside, we still have a key things to look for. Mainly the interest rate decision from the Reserve Bank of Australia coming up first, followed by the inflation or the heavy lineup of inflation from the Euro economy. And of course, we end the week with the highly anticipated NFP report for September coming out of the US economy and how the unemployment rate will affect the dollar trading. Of course, we'll look into this. We'll go through the major themes that you need to look out for and how this could affect trading on the major assets like gold, US oil, the US indices, and the other currencies as well. So stay tuned. So starting off with the economic agenda for this week, and the high ticket events will basically, as usual, start from Tuesday, most probably Mondays. Don't really include or rarely includes any high risk events. So starting on Tuesday, we will be having the Reserve Bank of Australia interest rate decision. And as we can see, the expectations are to fix interest rates and to keep them steady around the levels of 3.6%, which is definitely something I personally see as it makes sense, because when we look at the recent economic data from the Australian economy, inflation has been moving lower to 2.1% as per the last reading. So it's pretty much under control. When we look at the GDP annual growth rate, it has also been trending higher during the last 3 quarters. So inflation is under control. The GDP or the economy is expanding. And I personally believe that the current interest rate might be, or the monetary policy stance might be just okay for now when it comes to the Australian economy. So markets don't really see any change in this 3.6% figure. However, it's always also important to have a look on any forward guidance provided for the next meetings. Is there any set or predetermined path for the interest rate decisions for the next meetings or not? This is something that markets will highly look for. Moving forward to the European session on Tuesday, we will have a set and heavy line of inflation data coming out of the Eurozone. And it starts with France, Italy, Germany, and so on. But generally, we would personally expect the inflation numbers to continue moving a little bit lower in the Euro economy. We also have the job openings and the labor turnover survey, which as per the last reading, it came around 7,181,000 new jobs for the month of August. And basically markets are highly attentive to the job market data at the current time, because we have all seen what's happening with the job market recently in the US. So we would want to really know if the job openings will continue moving lower. They have been moving lower for the past 2 months. So let's see if any new data or this data can change the narrative somehow, and the market's pricing of further rate cuts during this year. Moving forward to Wednesday, we will be having the flash estimates for the month of September for the inflation data coming out from the Eurozone. So it's still an estimate for the month of September. It has been 2% for the previous 3 months, and it's expected roughly to come around the same level of 2%, which is again positive generally for the ECB, and the ECB is not under any pressure of any kind to cut interest rates at the moment. We will also have the ISM manufacturing PMI for September coming out of the US economy, and generally we haven't really seen a PMI number higher than 50 points during the last many months, unless for January, I believe January 2025. So generally we are still below the 50 points limit. However, as per the expectations, we might see a slight improvement from 48.7 to 49.2, which might generally improve the sentiment about the the future path of how the economy will perform in the US. Moving forward to Thursday, it might be not a big day. It's only the balance of trade from the Australian economy, as well as the consumer confidence from the Japanese economy. And of course, the most important and the highly volatile day that we will be waiting for during this week should be Friday, the 3rd of October. First Friday in any month, it's the NFP data. And of course, we are continuing to see the expectations of really weak data. So yeah, expectations point to 39,000 new jobs have been added or being added in September. However, it's still better than the previous 22,000. Yes, however, it's still really, really weak. And the question is, can we see any positive number even higher than 39,000, and whether this can change, again, the narrative regarding the forward path of how the Federal Reserve will cut interest rates? Because as we speak, we have 2 expected rate cuts during this year, 2025, and only 1 interest rate cut moving forward to 2026. We don't forget that the initial jobless claims for the previous week was basically a little bit positive, 218,000 new jobs, which is the lowest in 2 months. So markets are basically waiting for any signs that the weakness in the labor market might not be really terrible after all, and maybe we can change the narrative in markets or see this change happening. The unemployment rate is still expected to show around 4.3%. And we also have the services PMI for September. Previous was 52 points and expected around the same. Basically, we might see some high volatility, or we will be seeing high volatility on Friday, the 3rd of October. And I also will note that Tuesday, the 30th of September, might witness some higher volatility than usual, because it's the end of the trading month and the end of the trading quarter as well. So the end of the month and quarter, inflows and outflows can affect the volatility in markets. Let's dive into the technical analysis and check out some interesting supply and demand zones and how we could trade those patterns as per the analysis. So starting the technical analysis with a quick look on the dollar index, we can see that the levels here around the 98.70 are really areas of interest here, major supply zones. And if during the week we have managed to see a break and holding above this level, a break and a close of a daily candlestick above this level of 98.70, we can see the clean price action to the left-hand side up to the levels of 100 points. This is, as we say, a path of least resistance. However, in order to anticipate this upward push on the dollar index, we need to see that maybe the Federal Reserve will change the narrative, or markets will change the narrative about cutting interest rates in the near term, and maybe we can see higher interest rates for longer. And in this case, if we manage to close above the 98.70, this push might basically be seen in the markets. When we come to the euro versus the dollar on the opposite side, we can see that we do have some levels of support here around the levels of 1.6. Again, if we manage to see the euro versus the dollar break below this level, again, a very clean price action to the left-hand side down to the levels of 1.14. This is something that technically could take place. However, we need, again, data to be on our side in order for this scenario to play out. When we talk about gold, and on the daily time frame, we can see that the major, or the last big demand zone currently on this chart is basically the levels of around $3,720. As long as we are holding trading above this level, gold is set to continue the upward trend. However, in case we break below the 3,720, which is something we can expect to happen given the recent price action, we can expect to see gold retrace a bigger part of the move and maybe move lower to the $3,650 per ounce. And let's conclude this very quick technical analysis with a look on the US indices. Here we do have the S&P 500 and the levels of around 6,600 on the S&P is basically a powerful demand zone here. We can see that this demand also not only on S&P, but we can also see it on the Nasdaq around 24,200. So on those levels, as long as we're trading higher, the upward trend is set to continue. Even if we break lower, yes, the retracement can extend for a little bit longer, but this doesn't absolutely mean that the bull run might have ended. We still believe that the US indices are bullish generally. Let's wait and see how the news will play out during this week, especially the NFP report, and how this will affect those technical scenarios and key levels of demand and supply. Thank you so much for watching this, and we will see you again in the next week ahead video. Thank you and stay safe.